welcome to the latest episode of... Ooh, wait. Why isn't it showing? There we go. Harrington Horn Sweatin Money. So we may or may not have ownership or other positions on the stocks mentioned on the show. Don't buy stocks based solely off of what you hear from this podcast, and always do your own homework and research before investing in stocks. I'm your host, Kong, along with my co-host, Gibson. So let's take a look at what's in the news. Economists are worried about the drift economy, where everyone's kind of just drifting along, but not much economic growth is actually happening. Even in Asia, which has been an area of exponential growth, has seen a lot of slowing down. Taking this into consideration, G20 nations came together and they're trying to stop this slump in economic growth. So they agreed to use measures to increase trade. What exactly that entails, we have yet to find out. And on Wednesday, the federal court in San Francisco served Facebook, requesting that they provide them with documents relating to an IRS examination over tax liability in 2010. Unemployment actually climbed by 0.2% in May, and on the flip side, labor force participation went up by 0.1%. The economic confidence wasn't all that high to begin with, but it continued to drop 3 points according to Gallup's Economic Confidence Index. And consumer spending, however, moved up. According to the 14-day rolling average, spending went up by $4, but if you look at the 3-day rolling average, the jump was up by $17. So, taking into consideration all the stuff that's going on, the Federal Reserve meeting minute notes were released, and of course, the low job creation and BrExit were two issues that were taken into consideration. So, any thoughts?
Makes sense. So what did it consider? Did they say that they're basically going to hold off on the rate increase for a while?
Right, yeah.
Makes sense.
Luckily, however, June job reports eased the situation, and things aren't looking as bad. Payroll actually, or jobs actually increased. So there's hope for the global, there's hope for the economy. Because what they were worried was if June was also lagging behind, just like May was, then this might be a sustained issue. But, June was looking pretty good, so there's that.
That means all worrying were for naught.
Yeah, I guess. Well, let's take a look at the week in review. Throughout the week, the Dow Jones had gained 1.08%, S&P rose 1.27%, while the NASDAQ had rose 1.94%. Just a reminder, Monday the 4th was a holiday, so markets are closed. But let's take a look at the Monday international markets. This is what Australia's stock market looks like, and I mean, that's a pretty big jump. Oops. Ooh. No. Did I forget to... Back. Sorry. But yeah, so the reason why Australia had jumped was because of voting season. It's finally over, and the Australians are finally confident that as long as the BrExit and China's slowing economy doesn't have much of an effect on theirs, their stock markets should actually reach record numbers by the end of this year. Supposedly, valuation for Australian stocks are very cheap. I mean, but do you actually think that China's slowing economy won't play out anytime this year?
Well, I wouldn't be surprised if there's a world global slowdown in general, just because once you, like any type of growing business, at some point it's just going to plateau. And, I think, you have to understand what ultimately drives economics in general is the activity. And in a way, I think it's kind of like a giant pyramid scheme. At some point, this is going to have to slow down. At some point, you're going to reach a plateau. And we're lucky it's really just slowing, it's kind of plateauing, because if the worst comes to worst, it's actually going to go into a recession. There'll be like a global recession, right?
Yeah.
So, I mean, is there any person out there right now who can name a factor that can cause global growth? No one can really name it either. I mean, China picking up steam because they're, like opening up trade to across the world and adopting all these different things. Well, that's a no-brainer. It's going to basically pick up its economy. But, well, what's the third country? What's the fourth country? How do we open up those? I think that's a big concern for the rest of the world now.
Right. Well, moving along to New Zealand, their stock market just, it rose, not as much as Australia's, but still rose. Taking a look, it turns out that the milk price features in New Zealand are hitting record numbers, which means the price of milk will rise. Now, this is good for their economy in that they're still heavy with animal husbandry and farming as significant parts of their economy. So, then here's a look at the Japanese Nikkei index. It rose in a single day 4%.
That's a lot compared to all the other markets we've seen so far.
Yeah. Now, so the reason for
Pokemon.
The reason for Japanese stocks soaring is they recently held new elections, and the upper house saw Prime Minister Shinzo Abe's party gaining more representation, which means that'll make it easier to push for stimulus packages. Now, that picture of all the Pikachus that you're seeing right there, Pokemon. I mean, Nintendo's stock freaking jumped like 10% in a single day.
Damn, should have invested.
Yeah. Well, it's
Pokemon Go.
It's but it's in over-the-counter markets though.
Oh, then maybe not. I don't touch that stuff. Don't touch pink slips.
Well, Korea's Kospi was also up. Nothing specific there. Shanghai Stock Exchange, that was up by 1%. And then there's the Taiwanese Stock Exchange, 1.68%, which is doing pretty good. One thing I forgot to include was the Japanese messaging app Line, which is owned by South Korean tech company Naver, just had their IPO on Monday in New York and Tokyo, earning the company $1.14 billion. So, did you invest?
No. Is it 1 point, like the billions in profits or revenue? That's a big difference.
Just simply people purchasing their stocks.
Interesting.
Now, the thing is that, I mean, like, I tried to look up their symbol, and I couldn't find anything. Supposedly, it's supposed to trade under the symbol LN, but I see nothing.
Mm.
All right. Well, the thing is that with this stock, considering the fact that it actually made some money, people actually bought their stocks, and of course, it actually rose supposedly, which even though I can't find it, it runs counter to a lot of the other the other tech companies like Facebook, and what else is there? Like all these other tech companies who put, once they had an IPO, like it just started tanking for whatever reason. And I thought the same thing was going to happen with these guys, but apparently it didn't. But then, of course, I still can't find their ticker symbol.
Give it some time. Who knows?
Yeah. Oh, well. On to Hong Kong. So, yeah, Hong Kong also doing pretty good. And part of it is that as the Chinese yuan is weakening, more investors in China are actually looking towards Hong Kong equities. Since the Hong Kong dollar is actually pegged to the US dollar, it's actually a good hedge against the Chinese currency and their companies. So let's take a look at investor sentiment. As you can see here, people are a lot more positive this week. That's pretty much it. And now let's take a look at the playbook. Now again, just a reminder, none of the following should be misconstrued as financial or investment advice. This is merely provided for documentation only. And that's what's happening with my portfolio right now as far as Disney goes. Starting to come back up, making some money again. Dunkin' Donuts, that was such a good purchase. Dunkin' Donuts, I do not regret that. My positions in Koenig & Phillips are still kind of like wavy. I'm still not making what I'm not making up for what I lost from them. And then there's also Square. It's coming back up, but I'm still losing here. So What about some of your investments?
No, they're all in the red, but it's not like I'm too worried about them. They're all very strong companies. Disney is one of them, and I have full faith that their Chinese and their investment in China is going to pan out. I guess one of the mentalities I've gotten from the Warren Buffett conference that we both watched was, kind of think about like just your stocks, like your own companies, and if whether or not you agree with your company's decision. I think it makes sense. Beyond that, I don't think there's a better move for them to make. Perhaps there's not even a better move for me to make either. So I agree with my stocks choices right now. I could feel comfortable about it. And, I feel like the worst of everything has already hit. There's really no more like negative news that can really affect my stocks. So this roughly, I assume, would be the bottom for me.
Okay, so right now you still have your positions in, so it's Disney, McDonald's, who else?
Bank of America, and then a short on Caesar, which is like sub $7 now. So I do have a gain on it if I wanted to sell. Well, buy to cover.
Yeah. Okay, cool. So let's take a look at the week ahead. Monday, the Cincinnati Fed will be speaking, and then the Tuesday you have the NFIB Small Business Optimism Index. The St. Louis Fed Chairman is going to speak, and so will the Minneapolis Federal Reserve Head, and the Cincinnati Fed will make another statement. Wednesday, you have import-export prices, Atlanta Fed business inflation expectations, and the Philadelphia Fed will be speaking. Thursday, you have the weekly jobless claims, Bloomberg Consumer Comfort Index, and the St. Louis, Atlanta, Kansas Fed chairmen will speak. Then Friday, you have the Consumer Price Index, retail sales numbers, Empire State Manufacturing Survey, industrial production, business inventories, consumer sentiments, and the Minneapolis Fed will be speaking. So, yeah. So this week's recommendations is this little article asking, is saving 15% of your paycheck actually enough for retirement? Basically, the conclusion is that depending on your age bracket of when you actually start investing, 15% might not actually be enough. But of course, if you're not starting soon, you're kind of shooting yourself in the foot. So, meh.
Makes sense, I guess. I mean, you got to work for when your current lifestyle. Like, you had to work to sustain yourself now and yourself in the future. That's roughly what it is. So you have to work twice as hard.
Right.
Makes sense.
And that's it for today's episode. Just a reminder, we may not have ownership of other positions in the stocks mentioned on the show. Don't buy stocks based on featured from this podcast. Always do on here. We're really interested in the stocks. And if you like listening to this, please subscribe.